Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So we got a comment on the channel about how the interest rates are historically the highest they've ever been.
Right. So if you like data, please subscribe, hit the notification bell, like the video, share the video. Let's go.
Okay. And so we disputed this, of course. And the comment was they were 3 to 5% was like the high. That's the normal range. Interest rates have always been 3 to 5%. Of course, we know that's not true because we bought houses over many, many decades.
Now we know that we look like we are extremely young.
Super young.
And that we've never seen interest rates above 3%.
Yeah.
But we've been around the block, we've been around the sun about more than half a century.
Yeah. So what we're going to do is we're just going to put the chart up and we're going to let the data answer the question.
Yes.
Okay. So that little jagged line is the average 30-year fixed mortgage rate in the U.S. Okay. And if you see the very bottom there is 2.5%. So don't get freaked out it didn't go up by 20x. Okay. It has gone up a lot. It's like 2.5 times what it was at the beginning of the year. I think it was 3% at the beginning of the year. It's over 6 now. But you see up there, it says 6.42%. And as you go back further in time, you realize at one point interest rates were like over 17, 18%. Mm-hmm. And actually, if you go back into the 90s up to 2020, interest rates were anywhere from 12 to 8%, like all the time. And guess what didn't happen during those times? Home prices didn't crash. Matter of fact, home prices kept going up.
Right.
Even with 8 to 12% rate in interest rates.
I mean, I remember when I got my one of my mortgages, I refinanced, and I refinanced to 6.75, and I thought I had won the lottery. I thought that was that rates were never going to be lower than that. So, a 6.75 mortgage right now is actually on the high side.
Yeah, and there's no question that the lower rates we had for the last few years have pushed up prices because it made the barrier to buy a lot easier. And some of that certainly is inflationary, and some of that is just artificial. The other thing, though, that's interesting here is that a lot of people use this opportunity of low interest rates to refi their house, and they've locked in these low mortgages. So what that means, what does that mean to you, Juana? You just locked in a house at a super low interest rate. Now you're going to go move somewhere because you got transferred. Are you going to sell that house or are you going to lease it out?
So I'm not going to sell it. I am going to lease it out. And the other thing to keep in mind that some of these mortgages are actually assumable.
Okay,
so,
some are.
Some of them are assumable. So if it's an assumable rate mortgage, maybe what I'll do is have the new buyer assume my mortgage and pay me out whatever my equity is plus my down payment and whatnot, or maybe carry a second or something like that. So there are all kinds of creative ways of dealing with that.
What's interesting too about this is if you look all the way to the right, that little peak, it's come down a little bit. It broke 7%, the average in the U.S. Back in November, beginning in November, and it's already down. So it's over the last 7 weeks, mortgage rates have come down about 0.6%.
Yeah,
which is. It doesn't look like a lot, but 0.6% from 6 is about 10% of what it was. And if interest rates do keep coming down, of course, it just makes it, more people are likely to enter the home buying market.
Right. The other thing to look at is just at a glance, just look at this chart and notice that interest rates, the last time they were at these levels was more than 20 years ago. So the idea that, interest rates are historic, they're not historic, okay?
Really, if you go back before the great financial crisis, everyone was getting 6% rates. So, and home prices back then were anywhere from 175 to 300, and that was the run up from 03 to 06. Okay, certainly, if you look back in the 90s, home prices for the most part in the 90s continued to climb, and 8 to 10% was the going rate in the 90s for a home mortgage. Yes, home prices were less in the 90s. So, but remember, this is one piece of a big equation.
Right. Well, so were wages. A lot of things were less in the 90s than they are today.
Yeah, wages were less too.
We were younger.
We were a lot younger. So the whole thing we want to do is point out that while they're certainly if you have a short time frame, they're the highest they've been in a short time period. But historically, they're not. Mortgage interest rates certainly aren't. Inflation seems to be under control. There's still 2 more Fed rates coming that are already baked into these numbers. If the Fed raises more or if inflation numbers get worse, mortgage rates could probably go back up. But it looks like all of the predictions that we did a whole video on this, all of the predictions were that home prices or mortgage rates would either moderate or go down. It was like 60% say they would moderate and 40% say they would go down. And Fannie Mae had the most, that they were the best, in my opinion. They said 4.5% by the end of 2023 would be which I think would be fantastic, except for this, unless you're trying to buy a house, because then what would happen is it'd be super competitive again.
Yes. So tell us what you think about interest rates. Tell us what you think about the Fed chart. We like it. So do you like it? What do you think of it? If you like the video, please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.